We have Kizito Odunze, a fixed income trader at Don Laurie Merrifield, standing by. Kizito, many thanks for joining us on the show today. And I want to start with the OMO auctions. I think that's the big news in the fixed income space these days. Now we're seeing yields as high as 12.5%. The central bank being quite aggressive at trying to mop up excess liquidity. Can you just talk us through the dynamics of that market right now?
Yes, as you mentioned, the CBN has, over the past couple of weeks or months, continually mopped up excess liquidity in the market. What we've observed is there has been significant excess liquidity. For instance, this month alone, we expect maturities every week totaling about 1.1 trillion, whereas the Treasury bill auction for this week is about 157 billion compared to 380 billion maturing this week. So it's obvious that there's always excess, or there has been excess liquidity, and we expect that to persist in the coming weeks as well. So given the trend we've seen over the past weeks or months, it's expected that the CBN will also come out with their open market operations to mop up the excess liquidity.
But do you think they may need to raise those yields any higher? Because at 12.5%, that's already quite attractive.
Well, that's left for the CBN to decide. Because if you notice that last week, there were a couple of sessions where the CBN sold a lot less than was subscribed.
Yeah.
It seemed the CBN had a prearranged or predetermined level they intended to sell at. Now, if they continue mopping up, I expect the market to want to push those yields higher. But we'll just have to wait and see if the CBN will budge.
All right. Okay, so what are your expectations, broadly speaking, across the yield curve? How do you think things are likely to play out? Because on the short end, we're seeing, if OMO yields are 12.5%, what is the incentive for people to go into the longer tenors?
Contributed to the increased interest by foreign investors. On the bond market, we noticed yields dropping from almost 12%, dropping to as low as 11.5%. Today's activity, we saw a slight retracement where yields went a little bit higher, even though the increase in yields was marginal.
Right.
On the four major maturities on the run on the bond market, we didn't see any uptick in yields above 15 basis points. But as I said, the trend so far, given the renewed interest in buying from foreign investors, has seen yields drop. I remember we spoke about this about a couple of weeks ago, where the yields were going higher and approached 12%.
Yeah.
And we were of the opinion that at that level, we would expect significant buying pressure. And we saw that. So far, we've come down to 11.5%. We just wait to see if the demand from the foreign investors would push it a lot lower, or if it has waned, then we might as well see a plateauing of yields at this level.
Right, and of course, it's important to note that foreign investors are prevented from buying those OMO bills. But let's move on to the corporate issuance, and what we're hearing now is that Fidelity Bank has wrapped up its Eurobond issue, $300 million, issued at 6.875%. It seems like a pretty high yield when you compare it to what GT Bank and Access Bank are trading. Those are trading at 4.43 and just about 5.6% for Access Bank. So your thoughts about the issue yield for Fidelity Bank?
As you said, what you mentioned was the coupon. The issue yield was actually 7%. Which is even better and even more attractive.
Right.
Now, the Nigerian economy is broadly seen as stable, and drawing from that, you can imagine that the foreign investors would be somewhat ecstatic to see dollar-denominated debt at such levels. The Fidelity Bank has strong fundamentals, just as most other banks, given most other banks have come out stronger after the healing, for want of a better word, by the CBN governor. So we would expect that at these yields, in no time, the trading yields
Right.
or the secondary market yields on this particular debt would inch closer to where their peers are trading, somewhere sub 5%.